In today's video, I'm going to show you guys how to take 4 short candlesticks and also catch spikes successfully on the boom and crash market. Alright, so let's get on with it. So you can see right here, I currently have about 3 indicators on the chart: double moving average and the relative strength index. I'm going to show you guys the parameters by going to the F icon. On the main window, you put on the moving average, period 10, shift 0. Method is simple, right? Apply to close. The style is 2 pixel with color green with this first trend line. Then you click on done. Alright, the second indicator is going to be on indicator window 1, relative strength index, period 14. Apply to close. The level is going to be on 80, 20, 2 levels, right? While the style is going to be on 3 pixels. Alright, then this middle trend line, you click on done. Then the style right here on the main page is going to be on 1 pixel with color white with that first trend line. Alright, with that first trend line, then you click on done. Perfect. Alright, so as you can see right now, we're on crash 1000 index market, and this market is a bit volatile. Alright, so when you're trading the market, you need to be extremely careful and also watch the video to the very end so that you can understand everything I said in this video. Alright, so basically what we're seeing here is that we have a level of 80, we have a level of 20 at this very point, and we're also seeing the moving average on the main chart. Right, if you want to get 4 successful candlesticks on the chart using this strategy, all you need to do is wait until the moving average on indicator window 1 gets below the level of 20. Then you enter into the market for a buy. Then you take 4 candlesticks. After successfully getting that 4 candlesticks, then you exit the market and take your profit. All right, you wait until it crosses below the level of 20. Right, the moving average needs to cross below this very point before you go into the market for a buy. All right, you can wait after about 2 candlesticks before you place your buy entry. Then you take just 4 candles from the market. All right, as you can see at this very point right here, below the level of 20, then you go into the market for a buy, take just 4 candlesticks and you're out of the market. All right, and when you are using this strategy, make sure you always confirm your entry on the higher time frame, such as the 1 hour time frame or 30-minute time frame. You confirm your entry first, observe the market to see how the market is moving. Right, so currently right now you can see that this markets have been selling for a very long period of time, right? And the market just started to buy, right? So this market should buy. That's basically what we're expecting this market to buy, right? So now we understand that the market is going to buy. We'll go back to the 1 minute time frame, right? This market is going to buy. Then we wait until price have crossed below this moving average, have crossed below this level of 20. Then we'll go into the market for a buy. Just take just cap the market, take just 4 candlesticks. Now, how do you catch spike using this strategy? It's very easy, very simple to catch spike using this strategy. You wait until the moving average crosses below the level of 80 at the very point. Then you wait for about 4 candlesticks, the same 4 that you're going to be buying on the below the level of 20. You wait for 4 before you enter into a market for a sell. You can see at this very point it crosses above the level of 20. You start to count 1, 2, 3, 4. As you can see, there was a spike, right? There was a spike. You count just 4 candlesticks, 1, 2, 3, 4. Then the spike came into the market. So when the moving average crosses above the level of 80, you go into the market for a sell. All right, you go into the market for a sell and you cash the spike. All right, you go into the market for a sell when the moving average crosses the level of 80. After you count 4 candlesticks, then you place your sell entry to cash that spike and get that perfect opportunity. You take a profit and you're out of the market. All right, and remember that you not place an entry whereby the market is extremely volatile. When there is higher volatility on the market, you avoid placing an entry at the very point. Okay, so here it crosses above the level of 80, you count 1 2 3 4 candlesticks ahead before you place your sell to catch the spike. All right, so we know that when you're catching the spike, there is no appropriate time that the spike is going to come into the market, but you can see that at this very point where the moving average crosses above the level of 80, it didn't take long before the spike came through, right? So that's why it's necessary for you to count 4 candlesticks ahead, then you wait, and you can see how long the spike is when it came through, right? You can see how long the spike is. Very long spike at this very point. You can see very good opportunity for you to place a sell at that very point. All right, so you can see how easy this strategy is. Very simple strategy. Okay, now you might ask, what is the purpose of the other moving average on the main chart? The purpose of this other moving average is so that you can observe the market clearly, see the current market trend, see the trend whereby the market is going, right? Whereby here the moving average crosses above this point, you trace it upwards, you can also see that price is almost at the overbought position at that very point on the main chart. Okay, it's also the moving average on the main chart also give you an insight into the market for you to place your entries. All right, so now we're gonna do this on the boom 1000 index. Go over to the bull market right here, boom 1000 index. We are using the same parameters: moving average, relative strength index, and so how do you catch spike and get a sell opportunity? Now remember, when you want to get your sell opportunity, you wait until the moving average crosses above this very point. You cross above this very point, you can see there was a spike. After the crossing, you go into the market for a sell. Take just 4 candlesticks at that moment. Okay, at that very point, that's when you place your sell opportunity after the spike, right? Crosses above, you go in for a sell. Then when you want to catch a spike, you wait until the moving average here crosses below the level of 20, then you count 4 candlesticks. Count just 4 candlesticks. 4 candlesticks, then you place your buy. The market would buy. You see there was a spike at this very point. You can see our profit. Take a look, trace it down here, crosses below, then you wait. After about 4, you can see that it even took just 2 candlesticks before the spike came through, right? Now the reason why I said that you should wait after 4 candlesticks before you place your buy or a sell. On the crash market, you place your sell to catch a spike. On the boom, you place buy to catch a spike, right? Now it's because that the spike does not, sometimes the spike might not come early, so that it will minimize the risk on the market, so that you not end up mostly for those that those traders that have small accounts, so that I don't end up with a lower balance, or the spike is going to come into the market, yeah, but so that their accounts do not decrease before that point that is spike, because sometimes you cannot really tell how long the spike is going to be. So the spike might come through. Let's say you lost about 6 candlesticks, and the spike that you're expecting to come should be about let's say 20 candlesticks, right? But maybe the spike that came through might be just 8 candlesticks spikes, right? You can see that's how small the profits are going to be. So sometimes the spike that's going to come into the market might not be that huge spike that you're expecting. So that's why I said you should count 4 candlesticks ahead before you try to place your sell entry on crash market or your buy entry on bull market if you want to cash the spike using this simple setup: the moving average on the indicator window 1 and moving average on the main chart with the relative strength index. All right, so guys, I believe after watching this video you understand everything that I've said in this video. Simple setup, simple strategy for you to cash spike, right? So if you found value in this video, do it to like and subscribe to the channel, and also guys, join my Telegram community. On my Telegram community, I share with you guys strategy tips. I give you guys free signals on boom and crash indices, volatility 75, volatility indices, and also currency pair as well, right? I share with you guys tips, give free signals on my Telegram community, completely free to you guys. All right, all you need to do is to join my Telegram community. The link is going to be on the description box below. all right, and also on my bio, right? So if you found value in this video, do it to like and subscribe to the channel, the Daily Forex. I'll see you guys on the next video.